I have no dollar figure for where silver is going to go in the end game, but I do believe strongly that's all that needs to happen. Once the gold that's on the Fed's balance sheet balances out the rest of the liabilities, all the other debt that's on it, that means that gold's at a certain valuation that balances all of the treasuries. Then you have fair value treasuries, fair value dollar. You can freeze it there.
That's what I'm saying. And
we'll have the gold and silver supplies spreading out through an honest derivative system, and then people will become richer slowly but surely. I mean, we're not going to stop the crash. We're not going to stop people from falling, but
In today's news recap, volatile prices stifle gold demand in top Asian hubs. Physical gold demand in key Asian hubs remained subdued this week as price volatility kept buyers at bay, while jewelers in India resumed purchases ahead of a key festival season. Gold prices in India were trading around 99,300 rupees, $1,135.77 per 10 grams on Friday, after hitting a record high earlier this month. With prices easing, jewelers are feeling more confident about festival demand and have slowly started buying again, said a Mumbai-based bullion dealer with a private bank. Indians will celebrate the Dussehra and Diwali festivals in October, when buying gold is considered auspicious. This week, Indian dealers were quoting between a discount of $2 per ounce and a premium of $3 per ounce over official domestic prices, inclusive of 6% import and 3% sales levies, compared to last week's discount of up to $6. Retail buying is still subdued, currently at around 60% of normal levels, said Amit Modak, chief executive of PN Gadgil and Sons, a Pune-based jeweler. In top consumer China, bullion changed hands between premiums of $3 and $8 an ounce over the global benchmark spot price, which traded in a range of $3,358 this week, down 0.2% so far for the week. With gold in the doldrums, there is scope for exaggerated moves on news from Jackson Hole, which reflects the thin trading conditions currently gripping the market, said Ross Norman, an independent analyst. In Hong Kong, gold was sold at par to a premium of $1.70, while in Singapore, gold traded between at-par prices and a $2.50 premium. We've seen a bit of retail buying, but nothing really substantial. In the jewelry space, demand has been quiet because prices are high, said Brian Lan, managing director at Singapore-based Gold Silver Central. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps.
Just as all debts are paid either by paying the debt or defaulting, all theft is paid too. Because when you steal that value, when you make an exchange of two people and they're both benefiting, legitimate, when you steal, one loses at the expense of the other. And so you have a net negative effect on society. So when you have a society that operates through these sorts of theft systems, those thefts and those debts are going to be paid one way or another. Now, I have no dollar figure for where silver is going to go in the end game, but I do believe strongly that the end game bell. How do we know when this is all over? The bell's ringing. Okay, well, the dollar has collapsed. It's going to be at a 15-to-1 gold to silver ratio, one that's relatively stable. I'm not saying we hit it one day, like in 1980 it happened for a day and a half or something. I'm saying this time it's going to stay that way until we can rebuild a basic economic system again. So it could be a year or two, three, I don't know. But I'm saying it's going to be stable enough that silver supplies can filter through the economic system, physical silver supplies, and that figuratively and almost literally creates a base of wider silver dispersal where you can rebuild another credit pyramid, hopefully an honest one where all debts are paid and you don't have fractional reserve or however you think the banking system functions. What does the United States look like? I really don't know, which is why, frankly, I don't want to live here. I don't know what Israel's going to look like either. I'd rather be with my people than being here, precisely because I don't know. I would imagine that states could break off from the federal government. The federal government could dissipate, and you could have regions, different regions. Like, if the South had won the Civil War, you'd have the Confederate States and the Northern United States. So, it might break into a few pieces. It's worth intrinsically nothing. The gold is the good money, and it's undervalued because if it were backed 1-to-1 with every dollar, it would be something like $40,000, $50,000, and it's only valued at $3,400. So it's artificially undervalued. Once gold is valued as at par with the dollar, whatever that is, either we get there legislatively and they say, we're on a gold standard now at this exchange rate. I don't think that's going to happen. Or the market forces it like it did in 1980. And what happened in 1980, the way Daniel Oliver of Myrmikan Capital puts it, is that if you look at the Fed's balance sheet, the valuation of the gold on their balance sheet more than 100% balanced all the other assets, all the debt, all the treasuries, and all the other crap they had. The amount of gold in 1980 valued at 850 backed every other liability by 100%. That functionally is a gold standard.
I think we were net creditors in 1980, though, weren't we? Pretty damn close to it, if not.
Yeah, and the debt was a lot lower. So that's all that needs to happen. Once the gold that's on the Fed's balance sheet balances out the rest of the liabilities, all the other debt that's on it, that means that gold's at a certain valuation that balances all of the treasuries. Then you have fair value treasuries, fair value dollar. You can freeze it there.
That's what I'm saying. And
huge news from China. Hong Kong drawing up plans to support gold trading. Special Administrative Region government is stepping up efforts to become an international gold trading hub and is reviewing related areas, including support for physical gold delivery, with plans to be unveiled later this year. As the city is making progress in building a commodity trading ecosystem, Chan underscored Hong Kong's advances in the non-ferrous metals market. Earlier this year, the SAR became a part of the London Metal Exchange's global warehouse network, an achievement he described as a significant milestone that has brought China closer to the world's most active metals trading markets. 8 LME-approved warehouses in Hong Kong have been operational since January, with more than 8,000 metric tons of exchange-registered warrants available to facilitate LME contract delivery as of early August, according to Chan. Beyond ensuring a stable regional metal supply, the move could also strengthen Hong Kong's shipping industry and support the growth of related services such as trade finance insurance and risk management hedging and derivatives. He added, the development in commodity trading is an example of Hong Kong's efforts to harness the opportunities arising from the technological revolution and a shifting global trading landscape to drive its economic transformation and upgrading in order to foster new growth engines, Chan said. So safe to say that BRICS master plan continues and the US dollar takes the L. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps. And check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trading the gold-silver ratio and increase your ounces. With this easy-to-read book, you'll know everything you need to know to stack efficiently so you don't have to rely on market commentators. Enjoy the episode.
Get the price level back to where it was in 1929 before the crash, then the crash will end. But really, the price level is just an effect of a much deeper problem down below. Why did prices fall? Because the inflation of the money supply was too high, and then it stopped, and then all these other industries that had overinvested in themselves, they collapsed.
Doesn't that sound like where we are right now, though?
Yeah, it is. And so Trump is trying to say, like, well, we've lost manufacturing. So if we can just get manufacturing back, then we'll be back where we were in the 40s and 50s when we were, a powerhouse. But it's the same pseudo logic as saying, well, in the 1930s, well, if we could just get the price level back to where it was in the 1929 before the crash, and everything will be fine. I don't think bringing manufacturing back should be a goal in itself. I think that manufacturing returning to the United States is a symbol that it's an outgrowth of the monetary system becoming honest once again. What does inflation do? It centralizes things to the cheapest countries where workers have, a lot fewer legislatively induced rights. There's child labor, and so things are going to go there where it's cheaper. That's just what's going to happen. So, I'm not against your plan, but what I would say is that, and I'll add another Torah-based story to this. That if we focus on just making money honest again, then all these things will happen. Manufacturing will return, and instead of having to legislate a universal basic income, we'll have the gold and silver supplies spreading out through an honest derivative system, and then people will become richer, slowly but surely. I mean, we're not going to stop the crash. We're not going to stop people from falling, but what we can do is get out of the way, and then let the market function as it would function. So the story I can tell you, and I released this in a video recently to my Patreon subscribers, is that I came across a verse that said that the menorah, the golden menorah, this big block of gold, right? And God tells Moses how to make the menorah. So the verse says that the menorah was made. It doesn't say that Moses made the menorah. So the rabbis pick up on this statement. They're like, what do you mean the menorah was made? Didn't Moses make it? And then they say, no, actually he didn't. He didn't know how. He was trying to, and he kept failing. And so Moses says to God, like, I'm just going to put this block of gold in the fire, and you, God, you can make it into a menorah however you want, because I can't do this. It's too hard for me. So, I mean, what does that tell me? It tells me that if we just return to honest money, return to honest gold, honest silver, there's going to be consequences. People are going to fall, but it's going to be up to stackers and other people that have real assets and gold to help rebuild and find the talent, find people who can do things with our money and become the capitalists of the world. And then these problems will work themselves out. I don't think it's up to us to discover a grand system or a grand solution to all this, where and put this variable here and that variable there. And if we just like make this trampoline or this what do you call it, that the stunt people they fall on when they're falling from the sky, like a big pillow.
Yeah, I know what you mean.
Yeah, whatever it is, it might be a good idea, but I don't have the expertise to tell you that. I just know that we.
What do you think of Rafi Farber's take? Do you agree with him? Is the banking collapse a certainty now, or will the dollar just be fine? Post in the comments section down below your honest opinion about the future of gold and silver, and share with the stackers if you're buying or selling at these prices. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.